Okay, YouTube. I was doing some back testing and I thought about traders taking trades and, you know, losing trades and, losing too much money and not being able to consistently gain money while trading. The problem is pretty much risk management. I'm gonna show you how I took, I think in this little back testing session, I took like 11 trades and I won like five and lost like six, but still came out profitable. I'm gonna show you how it's done. Okay. All right. So the first trade right here, this is the first trade. I'm not gonna replay it or nothing like that, but just going through it back testing, this is how it went. All right. The first trade was 2 to 1. You see the ratio, risk reward. So imagine me risking right here. Right here, I'm risking $100, right? Okay, that's the risk. On every trade, I'm risking $100 to win 200, right? Okay, so if I'm risking that right, winning that right there, 200, all right, the first trade, I won. All right, so that's $200 in the bag. All right, so the next trade, won this trade here, right? So right there, up 400, right? Okay, so this green area right here is the New York session. So all of these trades were taken during the New York session, right? Okay, because that's the only session that I'm gonna trade these days because trying to stay woke for the London, and then sometime occasionally I might trade the Tokyo session, but I don't want to get into a trade and it spill over into London, you know. So, all right, continuing on. Let's go to the next trade. Oh, this was a good one right here. I tell you, cause got in the trade right here. Trade went all the way up. Whew, went all the way up, almost to TP, which would have. Well, this was 1 to 1.9. It's supposed to be 2.0. Let's see. Right, all right, right. We go. All right. So the trade went up just a couple of pips from the TP, come all the way back down. Come all the way back down, and it took me out right here. This wick. This wick right here on this candle here, it took it out. All right, but okay. So if I was in a real live market, I tell you, what I would have done was move my stop loss to break even, you know, or I would have followed these dots up all the way up. That's what I usually do when I'm trading. I follow the dots all the way up. So I'll leave out with some money. But just to show you risk management sake, for risk management sake, I can show you how, you let your trades run. Either you're going to lose it or you're going to win it, and detach yourself from the chart. Okay. So right here, lost that one. Would have been a good one. Probably was in some real good profits there. All right. So on to the next one. Got in. Let me push this over right quick. Let me push this. Got in right here. Right here. I was like, okay, we about to push it on up then. So got in there. Started bouncing around. I almost came to my stop loss right here. Started bouncing back up. I'm like, okay, now it's gonna take off. These are just the motions of, trading. All right. So it went on up. I'm like, okay, we about halfway. It went down again and came on back up. I said, all right, this got to be the run for it. And then it just went on down. And all right, that was the second trade, lost. So on these two trades right here, we lost. That's a minus 100 here, and we got a minus 100 here. Okay. All right. So on to the next one. All right, we're still in the New York session now because the background is green. All right, so got into this trade here. Saw the way, we're not gonna even talk about why I got in the trade, but we just looking at how the trade won. Right here, got in right here on the close of this candle, got the signal to go short. Boom, it went on down and pushed on through. And this is the 45-second chart, by the way. Okay, so it's not no 5 minute, 15, 1 hour, 4 hour. This is the 45-second chart. When I trade, I like to be kind of quick about it. Okay, so won this one right here. All right, so that is a plus 200. Got 200 out of that one. All right, then we won the next one right here. Got into this trade. It was looking kind of ugly. It got up here, went up here, come all the way back down, then shot back up. That was something else. That was it was a good trade. It worked out. So we got 200 out of this one. And this is back testing too, All right. The next trade, got into this trade, and it was a loser. Okay. So, yeah, it went up and came all the way back down. So we lost 100. Lost 100 here. So that was a minus 100. All right. We're moving on along. Lost this trade. And from looking at this trade, the reason I got in it, because I saw failed momentum, a little divergence. That didn't work out. Divergence don't always work out. So, again, we're not talking about why I got in the trade. We're just talking about risk management as you take trades throughout the day. All right, so right here, we lost that. So that is a minus 100. Uh-oh, I didn't put the zeros. All right, there we go. All right, right here, won this trade. Boom. Got this one right here. Went on in. We got plus 200. 200. All right. Next trade was a loser. Minus 100. Minus 100 right here. All right. And then the next one. The next one was a minus 100. And this trade right here was taken late in the day too. Oh, I didn't move it. Let me redo that back. All right, let me get that right back. Okay, there we go. This trade, that's still not in the right place. All right, let me see. This trade right here, it ran over into Tokyo, right? Before Tokyo took me out, right? Which I should have just closed it down. I should have just closed it down. I got in this trade. It wasn't right here. Was it? Let me see. Where did I get in this trade at? Because I don't know if this is correct. Let me see. Yeah, got in on this one. Then it immediately started pulling back. Went back to my entry. Started pulling back. Then went down in the profit a little bit. And I was like, oh, New York done closed. You see this green box behind here? New York had done closed. I was like, well, all right, let's just let it run to see, And then Tokyo came. You can see this red box come here. Tokyo came in and shut it down, and it killed the trade. Okay, so let's just go back. We're gonna put minus 100 on that one. I shouldn't have took this one because it was so close to closing, but we're gonna put that one in there too. All right. All right, so we go back and we count the trades that we got. Okay, we go and count the trades, and we're gonna count the trades, and we're gonna see we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades. Okay, got 11 trades. All right, how many did we win? We won 1, 2, 3, 4, 5. Okay, so that's 5. We won 5. Okay, 200 times 5 is 1,000, you know. Where's the time symbol? Times 5 equals 1,000. Okay? How many did we lose? All right, we lost 1, 2, 3, 4, 5, 6. We lost more trades than we won. Okay? So, 6 trades, 100. Yep. 100 times 6 equals 600. All right. So we take the trades that we won and subtract it from there. And I know y'all know math, so I know you know what it's going to be. Minus 600 equals 400. So the profit for that entire day, out of all the trades that we took, we lost more than we won. And we still came out profitable with $400. Okay? That's the power of risk management. If you can trade like this, you can make money. If you do anything otherwise, you're probably going to lose your account. You're going to blow it probably. But if you want to learn a little bit more about trading, check me out in the Discord. I'm going to leave the link in the description below. Thanks.